Time for the market report. Zach's here to help us make sense of it all. Easier said than done.
That's right. We got a lot to get through this week. Yeah. But first, the numbers. We'll take a look at last week's biggest gains and losses, and then this month's WSDA report. What did it have to say? And finally, a deeper look into the Mississippi row crop situation. So, the markets closed last week slightly down. Both row crops and livestock mixed. Let's take a look. Last week's biggest gain, lumber, again up $27 and over 5.25% rise from the previous week. Last week's biggest loss, live cattle, down nearly 9 3/4 cents and over 5.25% drop from the previous week. This month's WSDA report dropped last week, a nice snapshot into how production and stocks stack up both domestically and globally. This time the biggest takeaways appear to be row crop stocks. Here's what it said.
U.S. wheat supplies up on increased imports and lower domestic use. Ending stocks also up by 14 million bushels. Season average farm price $7.20 per bushel. Global wheat supplies and stocks up slightly despite lower production. Trade down as well, mostly from lower exports in Argentina, India, and Egypt. U.S. corn production, supplies, and feed and residual use all up. Exports raised 50 million bushels. Season average farm price $4.85 per bushel. Global corn production also up, reflecting increases in Ukraine, Russia, Burma, and Paraguay, offset by decreases in Mexico, Egypt, and Indonesia. Imports up, and so are ending stocks. U.S. rice supplies slightly down along with production. Ending stocks also down due to lower all rice yield. Season average farm price $17.30 per hundredweight. Global rice supplies up mostly on higher stocks in India. Consumption and trade also up while ending stocks unchanged, remaining at a 6-year low. U.S. soybean production up mostly due to high yields in Wisconsin, Tennessee, the Dakotas, and Ohio. Ending stocks up 245 million bushels. Season average farm price $12.90 per bushel. Global soybean beginning stocks lower due to less imports in China and Brazil, while Brazil's beginning stocks up due to good 2023 harvest. Global crush raised while ending stocks reduced. U.S. red meat and poultry production down, lower beef from less steer and heifer slaughter, less pork from lighter dressed weights, less poultry from fewer eggs available. However, egg production is up. U.S. milk forecast also lower due to less cows and slower growth in milk per cow. Fat basis imports unchanged. All milk price forecast $20.70 per hundredweight. U.S. cotton production up nationwide despite less production in Texas. Mill use down as well, and exports unchanged, leaving ending stocks up. Season average farm price 77 cents per pound. Global cotton beginning stocks up due to an increase in India's production. Consumption lower, particularly in the U.S., Vietnam, and Turkey. World trade little changed from last month.
So, now with some context, what does the WSDA have to show us? I sat down with MSU Ag economist Will Maples to get an update on how Mississippi and U.S. row crops look so close to post-harvest, if weather was the biggest factor, as we've been hearing, and how the USDA factors into it.
Harvest is pretty much getting wrapped up across the state, a little bit of cotton left to get harvested in. And you know, there was some worry across the state with the dry weather we've seen. It's really South Mississippi's just in a severe drought. But we haven't really seen that carry over into the actual yields we're expecting. So this year, according to USDA, we're expected to produce 57 bushels an acre of soybeans, which would be a record high yield by nearly 3 bushels. So, and on the corn side, we're looking at great corn yields across the state. So overall, good year, good crops. It is very much farmer specific though. So with the drought weather, some farmers have been hit hard, especially in that central Mississippi area. I mean, there's a lot of cotton down there that just didn't make, and corn and soybeans as well. But fortunately in Mississippi, we have a lot of irrigation, and that really came through for us this year, looking at really good production numbers.
Well, how are things looking on the national level then, in comparison?
Yes, on the national level also, I mean, throughout the whole growing season, we had concerns of drought situations. Iowa, the I states were dry, not a lot of rain, and you know, but really in the latest WSDA report we saw come out this month in November, they actually bumped corn and soybean yields both from last month's projections. And this is kind of odd of USDA to do, because usually from that October to November report, traditionally that yield is adjusted down as more reports come in. But they bumped corn yields nearly 2 bushels an acre, and on soybeans about 0.3 bushels an acre. So seeing an actual yield bump, it was kind of expected. A lot of farmers were reporting a lot better than expected yields.
Well, you did mention the WASDE report, and I'm glad you did because I was about to ask you that next. What do you think the biggest takeaways from this month's WASDE report are?
So the biggest takeaways was that yield bump. So means higher yield bump, that especially on the corn side, it was nearly 2 bushels. That's a record level of corn production this year, most U.S. has ever produced. And if they just bumped production without actually doing anything on the demand side, we would have been in a lot better, it would have been a lot more bearish report. But they did on the demand side bump ethanol demand by 25 million bushels. They bumped exports a little bit higher as well. So it helped kind of limit that bigger production we're bringing in with the demand side, taking some of it out. But overall, they did increase the stocks levels, but it could have been a lot worse if we didn't have that demand piece as well. On the soybean side, we saw that production bump as well, but they didn't do anything to the demand side. So we are bringing in a lot more higher stocks than we were last month, but soybean stocks are still very tight going into next year.
What's been said throughout the year so far is that it looks like we're going to have a stock issue because of all the droughts and the weather. Does it still look like we're going to have stock issues?
Not on the corn side. Corn stocks they're not super high, and they're not super low. They're good. Corn stocks are fine. Soybeans are tight, and I mean they're at a level, as we've kind of seen the last few weeks, we've seen a lot more bigger sales of soybeans to China. If that export market starts kicking up, that could really add a lot more bullish sentiment to that soybean market going forward. And as we kind of look towards Brazil, so at this time of year, the market, we're looking at Brazil. How is their plantings happening? What's that production going to look like? But so soybean stocks are at a level that if a Brazilian crop just doesn't turn out as, at expectations currently, or we start seeing a lot more of that export side pick up, then I mean they're at a level where prices could go high.
And that's it for a deeper look into the markets. Looks like harvest nearly done, and then we'll know for sure our stocks and see how prices will be affected.